What are the risks that investors should be eyeing in the new year? Evercore ISI Chairman Ed Hyman is here with his outlook. Ed, Happy New Year.
Thank you very much. Nice to be here.
Great to see you again. Morgan Stanley says they see signs of euphoria in equities. Do you see those same signs?
No. I'm not sure what they're looking at. First, we survey 40 hedge funds every week, and they're defensive. And
Define defensive.
50 is neutral, and they're like 47. We ask them, how are you invested compared to your benchmark? Secondly, in the past 3 weeks, investors have taken $44 billion out of equities, according to flow of funds, and put $13 billion into bonds. So that's just an answer to your question.
That doesn't sound euphoric to you.
No, it doesn't. I think people they're concerned about things. You started out on the risk, and the market is sky high. PEs are high. The Fed's tightening. There must be half a dozen risk out there, whether it's political risk or nuclear war or whatever. And so a lot of people just say, this is not for me. But I think the market's sort of climbing a wall of worry.
So to be clear, you don't see any signs of euphoria, but you do see the market as being expensive.
Expensive is a very tricky word. You probably were putting a bid in on the Da Vinci sale, but
Joe does that every time.
I got outbid though. I wouldn't go over 400 million. I thought 450 million. That's crazy.
Is that right?
So yeah.
So it's a funny concept, and so a lot of people that you have on your show here that have a very particular view about the stock market, and then they'll buy a $40 million apartment on Fifth Avenue. I'm like, I say, what'd you do that for? He said, well, you have to live somewhere. And then you have Bitcoin is going crazy. But what's driving the market here, earnings are going up, as you guys report. And that's more or less the whole thing. But then you still have accommodative monetary policies. And
Although that's changing, though, right?
It's changing, but jeepers. I mean, it's changing like the ECB. So maybe they'll stop buying bonds, a little quicker. And the German bond yield is still 50 basis points. I think the Greek bond yield now is 350. It was down like 34 basis points last week. And so in my view of things, monetary policies are still incredibly, and if you'll have me back in a decade, we'll take a look and see if that's right or not.
So everything's going great. I mean, monetary policy is effective, is still accommodative. Markets aren't all that expensive. There are no signs of euphoria. So is it just these sort of the funny thing is, it does feel like people are still worried about something is out there, whether it's geopolitics or domestic politics, or China, or they're just still scarred from the crisis. It does feel like there's just this, even with this sort of lack of risks, like a general sense of dread.
So, like I mentioned, the things that people worry about is the value of the level of the stock market, the Fed is tightening, and you have all these risks out there. Why take a chance on it? So I was at a lunch a couple weeks ago, and another guy who was there who's cautious on the market. So I gave my case, he gave his case, and he won hands down. I could tell people saying, you're right. Why take a swing here? Right now, we should either stop, or you need to explore the possibility this is a super bull market. Because we've already had a bull market of historic proportions. And in the last 3 super bull markets, the last 5 years, the market tripled.
All right, so let's be pessimists for a moment. What could make this stop? What are some of the risks that will cause people to say, you know what, I'm right to be defensive, I'm right to not be fully invested?
The things that can derail this take a while to develop, which is why the market, it knows that. So first thing that can derail it is inflation really takes off, which could happen, certainly could happen. And if that happens, maybe the Fed panics and over-tightens, and that combination gets the market to go down, and then interest rates are high, the system is heavy on debt, and we go down and goodbye. But at the moment, it seems like that's maybe around the corner. And until I get to the corner, people are sort of being pressed to move into the market.
Well,
as near as I can tell.
You mentioned having this debate with someone who's more skeptical about the market than you are, and everyone was convinced by the skeptic. Isn't that always sort of the case that the bear always sounds like the savvy, intellectual one, the smart one, and that no one ever really believes the optimist?
I wish that we could, see the future and we could sit and watch it, because I believe that at the end of this cycle, the smart people will all be bullish. In 1929, Irving Fisher, who was the economist of his day, the most Yale economist, the day before the crash, he says, "We've entered a new era of prosperity," and that was it.
His time frame was too
So
short.
have the tax cuts that the Trump administration passed, does that push us into a new era of prosperity? They would make the case that it does. From where you sit,
it's hard to know.
Do you see it?
It's hard to know. You take a day at a time. So you guys have this really excellent consumer confidence measure. It's a weekly measure, consumer comfort. If you saw it today, it went
highest in 17 years.
Went up, 1.7 points. And this is a fairly, it's even-handed. Whether you're rich or poor, live in a big city or a small city, you tend to, and it's up in spite of all the political drama is better put. And it must be a testimony to low unemployment, low inflation, rising stock prices, rising house prices, and maybe the tax cuts.
And small business is optimistic as well.
This week
Surging
also.
optimism.
Yeah.
So I won't even go to the tax cuts because, according to the polls, most people don't think they're good.